That's what I want. That's what I want. And come on, come on. There we go. Hey, it's me, Beast. What's happening, Beast? It's Beast. Beast is in the house. Way to go, Beast. Emerald, Mission Jack, Pet Peterson, K Townlin, Dylan. What's happening there, Mr. Dylan? Come on, get this baby running. There we go, and there we go. Cancel that. Okay, and live streaming. Here's Johnny. What else do we got? Anthony, Vass, Richard, Scott Ford, Hatha, Jeff, Lightfoot. What's going on? Joe, Richard, Alabama Redneck, Jeff M, Lightfoot, Joe Clark, Jesus Roman, Dragon, Bill, J. Dell, Nicholas, what's going on? What's going on? Michael Cotta, Twisted Curly. Okay. BJ Benar. Hey, James. Phil Otto, what's going there, Mr. Phil? Mike. GL Moley. Hercules. Crazy Man. Kelthrone. What's happening, Kelthrone? Chris Dilla, James, good evening, Mr. Jones. Stosia Claudia, Crazy Man. Yanya, Crave. Hasif, Grace, MK, Crazy Man, good evening to you, and how do you do? Neeler, James, what's happening, Clipex Studios from Kenya. Holy cow, how are you doing today? Kevin Rude, what's going on? Hercules, good evening. Ben 2K. Crazy Man, how's Target and UP looking? UPS. Well, let's take a look at it, Crazy Man. All right, there we go. Let's get out of there. Let's get back to there, and let's take a look at, what did he want to look at? Oh, Target. Ooh, Target. TGT, gotta love Target. Dividend King extraordinaire. All right, what are we gonna need? We need glasses so we can see. Scott Murphy, Vaz, Immortal Alien. Cool name. Rayanne, John, what's going on? John, oh, two Johns. Jason, Steven, Zill, okay, hold tight. Jacob, sit tight. We'll take a look at Curloff. Jason, J. Wirtz, Skippy. Alrighty. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Yay, the crowd goes wild. Woohoo. Anyway, let me get my pen. Now, what I'm doing here is basically showing you what I'm doing. Okay, it's simple, it's safe, it's predictable, it's considered consistent. It was created for my 9-year-old daughter back in 2008. Tony. Sergi, what's going on? ETM, what's going on? J New, Open Highway. Life is a highway. I wanna run. Rude, what's going on? Felix. Oh, Patreon, Jonathan. How's it going there, Mr. Jonathan? Not quite sure what to say, Mr. Jonathan, but all right. Joe, what's happening, Joe? Rough. Okay, so that being said, the trading strategy I'm about to show you this evening was created for my 9-year-old daughter back in 2008 when she said to me one day, Daddy, what are you doing? Can you teach me? Imagine that. 9-year-old little girl wants to learn how to trade stocks. Most adults don't get it. Most adults don't understand it. Most adults ain't very good at it. So how am I supposed to teach a 9-year-old how to teach stocks? Throbert Huggins, this isn't live, Jimbo, I'm out. I'm terribly sorry there, Throbert. Okay, you don't think it's live? I can't help you. Sorry. All righty. Anyway, thank you for that. Thanks for stopping by. Where was I? So 2008. I got you there, didn't I? In 2008, 9 years old, she said, Daddy, can you teach me? I'm quitting my day trading and switching to your program. Oh, all right, Matiko, way to go. Key Michelle, is that right? I don't know. Anyway, hi. Anyway, so 9 years old, she wants to learn how to... Day's a little bit too long today. My 9-year-old wants to learn how to invest in the stock market. And that was back in 2008. So it's not as if it was a new thing. So since 2008, this is what I've been doing. Okay, now granted, I didn't start sharing all my trades until 2011. So most of you probably haven't seen my posts since 2011 all the way up to the current. That's a lot. You're probably just here on TikTok, YouTube, wherever you're from. Because I got 9 different platforms. We got 2 more cameras, so we're going to be picking up 2 more, so that will be 11. Not this week, maybe next week, because I still got to get the tweaks out. And my Instagram does need some more, because I can't do live on Instagram until I have 1,000 followers. I don't have 1,000 followers on Instagram. Isn't that horrible? Anyway, so 2008, my 9-year-old wants to learn how to trade. So in order to teach a 9-year-old how to trade, okay, it has to be simple, safe, predictable, consistent, and no way for her to lose. Okay, now this stuff worked out pretty good last night, so I'm going to have some more tonight. I can already feel my throat getting a little sore. I'm just not used to talking so much. I know. You probably think I do this all day long. Nope. Nope, nope, nope. All righty. So, that being said, simple, safe, predictable, consistent, and no way for her to lose. Now, I'm going to go over each and one of those criteria as we progress through the night. So you're going to learn everything from beginning till the end. I'm actually going to show you some trades, and we're actually going to do a couple. I'm going to actually look at some of the stocks that you guys suggest and see how they fit into this particular strategy. And it's only one strategy I'm giving you for free. So here's the thing. If you do it right, simple, safe, predictable, consistent, 1% per week. Now, I know it doesn't sound like much, but think about it. Over a year, 1% a week is over 50% per year. Daniel, another boomer telling us how easy it is to make money when he started on easy mode. Daniel, I beg to differ, brother. I've lost more money in a week than you've probably made in a year. Okay? I've also made more money in 1 week than you probably made in a year. Not the point. The point is, I paid my dues. I've been doing this for over 30 years. 30! And I'm giving you this information for free. So if you don't appreciate it, you really don't need to be here. Okay? And no, I did not have it on easy mode. Because you started on easy mode. No, brother, I did not. When I started, it was $250 per trade as a commission. You have everything at your fingertips. You pay 0 in commissions or just a fee, which is like 60 cents. I was paying $250 when I started. So don't give me your crap, brother. No, I didn't have what you have today. So don't say I had it easy. I didn't. Anyway, I don't care. No, yay, Jedi, way to go. All right, anyway, I'm not going to listen to him anymore. Okay, you want to be that way? You be that way. And mommy and daddy bankrolled you. Oh, hell no, brother. My father left my mother back in 1966. We grew up on welfare. We were so dirt ass poor, there was no such thing as anything other than hand-me-downs. Okay, I don't even want to listen to you. You absolutely know nothing about who I am, what I've been through. Okay, I've pinched pennies. I have looked in the seats of my car in order to get pennies, to get milk and diapers for my son back when he was a baby. I don't need your crap. I worked at day labor. I was on top of a roof in the summertime in Florida doing flat tar roofs. I don't need to hear your crap. Mommy and daddy didn't give me shit. Okay? I don't need your shit. No, I don't. Advin Lee, do you have a girlfriend? Yes, I do. Bro, listen. Yeah. I got it, Aiden. All right, let's keep on going. Vince, preach. I'm not preaching. I'm going to actually get to stuff. I hate it when people come in, they automatically assume who I am. You have no idea who I am. You have no idea what I've been through. I'm doing this out of the kindness of my heart because I got sick and tired of being screwed over. And I know there are other people out there just like me that gotten screwed over by the bankers, by the lenders, by the powers that be. Let me put it that way. The little guy. I've been a little guy all my life. Okay? I've been doing this for 30 years. And finally, I got to a point. It took me 30 years to get to where I am. So I don't need your crap. Really don't. Wish I had a moderator so you can just eliminate you. Anyway, besides the point. Let's look at what we're doing and ignore people like this. So we're looking at Target. Target is a dividend king if you didn't know that, which means 5 decades of consistent profits. Okay, 5 decades. That's 50 years of profits. Whether you agree with their politics or not is irrelevant. The company's been around for almost 100 years and they have been profitable and consistently increasing their profits for over 5 decades. That's a lot. So let's see where they are today and see if it is a good possibility if, of course, you like Target. Okay, crazy man, we're going to do yours, so sit tight. Now, first time, every time I see a chart, I'm looking for 5 things, and it takes me 3 to 4 seconds. That's all it should take. 5 things. You ready? Here we go. Number 1, where's the high? That's not too difficult. Number 2, where's the bottom? Right there. That's not hard either. Number 3, where was it a year ago? Right there. Number 4, where is it today? Right there. And number 5, that's the hardest one. What's the direction? Down, up. Whoops. Up, down, down. What's going on here? This is what we want to look at because that is today, yesterday, and the day before. That gives us an idea of where it might go next. And that is key. 2 things that I think, this is just for me, okay? Agree if you want. You don't have to agree if you don't want to. I like to have odds and probabilities in my favor, okay? That means if I know something that is going to be advantageous to my trading to be more successful, that's what I want. So the reason this show is called Dividend Stock Talk, because we want to look at dividend stocks, specifically those dividend companies that are consistently profitable year after year after year. Second, we want to know when they're going to move. Well, great. Well, knowing when they're going to move and which direction they're going and the odds and probabilities in our favor makes it more favorable for us to be profitable more consistently. And that's what I'm doing. Now, I'm sharing the information for free, unlike what some people think. I'm not asking you for anything. I'm not going to try to sell you anything by the end of the night. I'm not going to say, hey, have I got a good deal for you? If you order now, you get 2 for the price of 1. No, I'm not going to do that. I'm just going to show you and answer questions. This is not advice. This is not tips. This is just me making observations of the stocks that you guys like to look at. That being said, first one on the list, Target. So I don't mind this right here. Okay, it looks like it's the bottom of the year. Well, here's the thing with the bottom of the year. You make money in the stock market buying low and selling high. And I hate to be the bearer of bad news, but there's no way possible you're ever going to get lower than the low of the year. And that was yesterday. Yesterday was the bottom of the year. Or was it? Now, me personally, I like 2 days to the upside after a bottom. So look at this. Here we are right here. So let's zoom in and see what the last 30 days looks like. Because the last 30 days is going to give us a good idea of where do we think it's going next. Boo to you too! I'll take a look at Colgate Palmolive in a little bit. Should have bought Bitcoin. Yep, okay. Those lenders are diabolical. Yes, they are. Ask Trump for insider trader. Thank you, Carlos. Stock going EX today. Gary, which one is that? I just have to give you money to debit double. Nah, I don't know. All right. These are diabolical, blah, blah, blah. You should have invested in precious metals. I'm going to disagree with you. I've never, ever seen a precious metal to give me any kind of return. Seriously. I got little bits of silver, little bits of gold sitting over here on my desk, and not once has anyone come by and say, here's a little bit for you this week. Here's a little bit for you this week. No, it doesn't happen that way. It's a dust collector, a paperweight. Don't get me wrong, it's a storage of value. So if you buy a block for $1,000, well, in 10 years, 20 years, it might be worth $1,500, it might be worth $2,000. Who knows? Okay, it's storage of value. It goes up as everything else goes down. Okay, fine, but it doesn't give you cash flow. Now, I'm 61 years old. I'm retired. So the income that I have coming in, no, it's not from a trust fund. No, it's not from Social Security. It's from working since 1973 till 2 years ago. 5 decades. I've worked 50 years of my life to get to where I am today. And I don't need no snot nose telling me what I did and what I didn't do. Anyway, besides the point. So, the bottom was 2 days ago. Monday was higher. Today was higher. Okay? Is it going to continue going up? Well, we don't know. Because although Monday was higher than Friday, today we have a lower bottom than yesterday, and we also have a higher top than Friday and today. So could it be the bottom? Well, there's your 2 days right there. I would look for a third day, which would be tomorrow, and that would be my entry point if I like Target, which I do. But here's the thing. I don't like Target going into earnings or going into a dividend. Where was I? Right there. All right. You don't know anything. Absolutely. Aiden says, I don't know anything. Aiden, you're absolutely right. Andrea, how are you today? Get out. What do you mean get out? I have no idea what that means. Okay, Andrea, no idea. Can you explain what get out means? You put something here, so you might be thinking something. I'm kind of curious what it is. All right, so that being said, here's Target. Now, I do like Target. Let's take a look at a safe trade. Now, a safe trade, in my humble opinion, is the covered call. So you buy the stock, you sell the option, you collect the premium. Okay, we don't have to wait for the stock to go up to get our profit. 1% is all I'm looking for. 1% a week is 50% per year. Okay, that being said, 88.96. So we'll be looking at the 89s right there, 89. And that's going for 118. That's more than 1%. Now, for those of you that are new here, have never been here before, this screen behind me, this screen right here is called Think or Swim. It's just a trading platform. It's nothing that I came up with, so don't think I'm that smart. I'm really not. Okay, I came up with a strategy for my 9-year-old daughter, and it just happens to work good. So I keep using it, and it keeps working. So I come from that time frame where if it ain't broke, don't fix it. If it's working fine, I'll leave it alone. Okay? Unlike the people nowadays, like your computer is now updated. Well, I didn't want my computer updated. Your iPhone has now been updated. Enjoy the new crap. I didn't want that updated either. Why don't you just leave my crap alone? Anyway, so if I like Target, which I do, I would buy it first thing tomorrow morning. I'd turn around at the exact, like a 1/10 of a second after I bought it, I would turn around and sell the covered call. Basically, sell it to someone else for the exact same price I paid for it. Here we go. It's 88.96. The closest strike price to 88.96 is 89, and that's going for 118. So for the fun of it, let's start off the night with a good stock, Target. It's not a tip, it's not a suggestion, it's not a recommendation, it's an observation. Crazy man want to take a look at it? Let's take a look. Now let's get rid of this. Let's open up to the covered call, because that's what I want to do. And if you don't know what a covered call is, there are literally hundreds of videos explaining what a covered call is and how to do it, how safe it is. Remember I said simple, safe. It's so safe that the federal government allows you to do a covered call in your IRA. There's a lot of trading strategies you cannot do in your IRA. However, a covered call is one that you can. Now also, if, I'm going to explain it a little bit more. I'm not sure if I can do 2 hours tonight. Here we go. The 89 right here. So let's buy it at 89. See what it looks like. Now, I don't want to do 10 contracts. I mean, that's why I have it preset for. But you guys just do one at a time until you understand what's going on. Now, this is the trade right here. Let me read it to you. Buy one covered call Target. 100, that's the weekly. 17 October 25. That is this coming Friday, 4 days away. The $89 call option at the market to open. Now, here's my profit right here. Do you remember when I said simple, safe, predictable? Do you remember that part? Predictable. Well, I know exactly what I'm going to make before, see, max profit. Before I even do this trade, I know what my profit's going to be. Unlike those people who want to buy a stock and wait for it to move. Well, it may take a day, a week, a month, a year for it to move enough for you to make a decent profit. Well, if I'm only looking for 1% every week, I'm selling it for the same price I bought it for. What I'm collecting is this right here. That is what's called the premium. It's an insurance policy. Now, we all know what insurance policy is. If you have a car, you have to have insurance. If you have a house, you have to have insurance. If you have health, well, you have to have health insurance. If you rent a house, you need renter's insurance. So what's involved with an insurance policy? There's 4 things: beginning date, ending date, consideration, and meeting of the minds. Those are the 4 requirements of a legal binding contract. The agreement, meeting of the minds. That's the technical term, meeting of the minds. Just an agreement, that's it. I'm doing something, you're agreeing to it, great, that's a meeting of the minds. Consideration, that's money. Or handshake, a piece of pie, a date, whatever, a cup of coffee. Anything of value can be considered as consideration. But in this instance, we want cash. We want cash flow. So in this instance, $124 per contract is the profit for this trade. So let's see exactly what that comes out to. So maximum profit, $124.50. Cost of the trade, including commissions and fees, $8,776. Okay, so if you don't have enough money to do a trade with a $80 stock, a $90 stock, look at a $5 stock, a $4 stock, a $3 stock. Whatever can fit in your budget. And if you can't do that and you're just starting out, you can always do what's called dividend capturing. It's simple, it's safe, it's predictable, and you can do it over and over and over again. All right, so to find out the rate of return, we take the profit, we divide it by the investment, and that gives us our rate of return. For that, we're going to need the calculator. Okay, the profit is $124.50 divided by the investment, which is $87.76 comes to a grand total of 1.4% for 1 week. 4 days, actually. Had we done it yesterday, we might have gotten a little bit more money, because if you didn't know it, there's 5 days in a week. All right, come on, we all knew that. But here's the thing. Monday is already gone. So we got 4 days left. So Monday being gone, you now have 80% of the time value for this week. 5 days is 100% of the time value. Monday morning, 9:30 a.m., Friday afternoon, 4 p.m. That is the maximum amount of time you can trade during the week. Okay, 9:30 to 4 on Friday. Well, the maximum is Monday, Tuesday, Wednesday, Thursday, Friday. That's 5 days. 20, 40, 60, 80, 100. It's 100% of the time value. So Monday's already gone. So you already lost 20% of the time value. That's why I do all my trading on Monday morning. Okay, by 9:35, 9:40, 9:50, sometime in that area, all my money's gone. It's all invested. Now, I get money every single week, 1%. So if I have 100,000, I get 1,000 a week. If I have 200,000, that's 2,000 a week. 500,000, 500 a week. 1% per week is my goal. That's my goal. You got to figure out what's right for you. You got to figure out what makes sense to you. All right, so 1.4% for target. Yay, target. Next was, what was next? Right, UPS. Crazy man wants to take a look at UPS, the ups dudes. All right, so the question would be, okay, before we go on, what's the question? Do I like Target? It's a valid question. Think about it. Do I like Target? Am I willing to buy it and hold it until it hits my target? What's my target? My target's 89. What's that now? 88.96. So what's the odds and probabilities of hitting 89 by Friday? We're talking 4 cents. And here's the bottom. Now she's going up. Is that guaranteed? No. There's only 3 guarantees in life. That's it. Most of you know 2 of them. Very few of you know what that 3rd guarantee is. All right. UPS is next. Let's take a look at the ups dudes, the boys in brown, UPS. Almost the exact same thing. However, today is the bottom of the year. You cannot get any lower than the bottom of the year. And that, my friends, is today. Now, I don't like, I've never, ever pick the bottom because I'm not bottom fishing. I'm not. I could buy it tomorrow, but it's not at the bottom anymore because the bottom was here at 82. Now it's at 84. Okay? So I'm not going to do UPS only because it doesn't fit yet because I don't buy at the bottom. I want 2 days to the upside, which means tomorrow, maybe, Wednesday, maybe, Thursday will be the easiest, the earliest I get into it. By that time, I don't have any money left, so I got to wait until next week until I sell something. All right, next. What do we do next? Do curlf. Jacob, what is CURLF? I never heard of it. Jacob, if this is going to be one of those, I don't know if you're new here or not, because there's a lot of Jacobs that do drop by. I like companies that are consistently profitable. That's number one. Number two, weekly options only. Number three, you got to have dividends because the name of the show is Dividend Investing for Weekly Cash Flow. So I'm hoping, see, I've never heard of it, which kind of makes me think that it's going to be a no right off the top. That's a no. Let's find out. CURLF. Hell no. Come on, Jacob. There's no options whatsoever. How much money do I need to make $1,000 a week for my expenses? 100 grand. No, wait a minute. No. 250 grand. No, wait a minute. 1,000 a month would be 250,000. No, wait a minute. That's not right either. 1,000 a week is 100,000. Okay, BP, 100 grand, 1% a week is $1,000 a week, roughly. All right, what do we have next? BP, how do I reach my kid? He is 15. It's a friendship necklace. I couldn't tell you, because my kids, my 9-year-old was interested. The other 3 weren't interested. Okay, the boys, no interest in money whatsoever. See, that was my own fault because they could have whatever they want. See, I had nothing growing up, literally nothing. Everything I have, I busted my ass to get. Okay, contrary to popular belief, some. Okay, so my children were used to growing up with everything. So how do you get them to realize the value of $1? Well, you can't figure that out until they're out on their own. Now they're yelling at me, Dada, shut the refrigerator door. Take what you want, and just get a glass. Don't drink out of the carton. Turn the lights off when you leave the room. Close the door. We're not heating outside. This is all the exact same stuff I said to them growing up. Now they're saying it to me because they have their own houses. Okay? All right. Jedi doesn't care. All right. Miss Diane. Good evening, Miss Diane. Stephen Eggleston, thank you for that. Adam, huge shift today. I bought the dip. Your method is way safer. Keep up the great work. Thank you, Adam. Austin, what's up, brother? Hot toddy. Ooh, I like a hot toddy. Definitely clears out the sinuses. BP, thank you for the hat and mustache. That was nice of you. Hattie Banker. Okay. Yasmina, good evening. Coach Khalif. Love the energy. Way to go. This is defense plea. Thank you. Respect. Thank you. Tell him you got it. Good for you. Good job. Adam, huge shift today. We already saw that one. Keith, thank you. Thank you. What do we got? Grant, how you doing? Leo, how you doing? Comanche, how you? Jay Abby, how do you find high return options? Okay, Jay Abby, you're asking me the wrong question. I'm not looking for high return options. I'm looking for safety. I'm looking for predictability. I'm looking for consistency. I have 2 goals at this point in my life. 1, consistency of profitability. 2, preservation of my capital. Unlike popular belief, or contrary to popular belief, I don't have the luxury of being wrong. I'm not working anymore, which means I don't punch a time clock. So I get to, if I feel like it, lay in bed until I'm done, wake up, go outside, play in my garden, play with the dog, go for a walk, sit and watch my fish, whatever I feel like doing. If I don't feel like doing anything, I don't have to. But The question you probably should be asking, J. Abby, what is it you want out of this adventure or this idea or this platform? Why are you here? What are you looking to learn? What are you looking to find? Okay, so high returns, if that's you're looking for high returns and only high returns, you're definitely in the wrong place. Now, I don't mean to sound rude, but I'm looking for safety, predictability, consistency. I'm looking for stuff that is boring as hell, monotonous, almost drive you crazy, that it moves so slow and the profits are so tiny. But here's the thing, Mr. Abbey. Okay, with a tiny little profit of 1% per week, that does come to 50% per year. And I am perfectly okay with 50% per year. So you have to figure out what it is you want. You want higher profits than that? Well, there's plenty out there. There are plenty of guys just like me teaching their trading strategy. They're looking for something different. I'm looking for safety, predictability, consistency, and preservation of my capital. Okay, if I lose, if I have to go back to work. Good evening and welcome to Walmart. How may I help you? Oh yes, that is an aisle 15. Enjoy your shopping. Come back and see us again. No, that's not me. I'm not very good with corporations. I'm not. Okay, so when my working days, I was the CEO. Would you believe it? I was the CEO. I had 26 employees. Do I look like that? Do I really look like a person of authority? Hell no. People will walk into the shop and say, hey, where's the boss? And they go, that guy. And I go, what? That guy? Yep, that's me. I'm that guy. Anyway, let's keep on going. Lead 3067. How you doing today? Okay, 815-18-1985. ULTY. Do me a favor. Before I look at ULTY, I want you personally to go find out for me before I look at ULTY and tell me how many years in a row consistently increasing their profits without skipping, without slowing down, and without going backwards. ULTY. Go, find out, come back, let me know. Does this thing have 2 decades of profits? Let's find out. Anna, Verizon. Gotta love Verizon. I do. VZ. There we go. Ooh, check that out. Now, I'm looking for 5 things, and it takes me 3 to 4 seconds. Are you ready? High, low. Where was it? Where is it? Look at this thing. Down, up, down, up, down. Right there. It's not the bottom of the year, but it is the bottom of the last 9 months. So this thing hits the bottom here, shoots up, comes back up, back down. Here we are here. Let's zoom into that and see what's happening. But before we do, wait a minute. I didn't go over the 5 rules. I did the 5 criteria: simple, safe, predictable, consistent, no way to lose. That's the 5 criteria. 5 rules. You ready? Rule number 1, never buy something you don't want to hold for a long period of time. Number 2, never sell at a loss. It defeats the purpose. Think about it. It defeats the purpose. Why are we investing? We're not investing to buy something and sell it for less. That just doesn't make sense. Rule number 3. Now this one I find absolutely baffling, because you're going to see tonight people are actually putting their hard-earned money into something, and you'll be scratching your head saying, what the hell are you thinking putting your money into that? So rule number 3 is make sure the company is consistently profitable. Now, the reason I told 813-1985 to go check out ULTY, because somebody asks me about that thing almost every single night. And every single night, I waste my time explaining to someone that they should have done their own homework. ULTY is not 20 years old. It does not have 20 years of profits. I don't want to look at it. You want to buy it? You buy it. More power to you. That being said, let's keep on keeping on. Yay! All right. Oh, so Verizon. Let's zoom in before we do. Wait a minute, I wasn't finished with the rules yet. Rule number 3, make sure the company's consistently profitable. Now, for me personally, I want 2 decades. Okay, and that's not 2 years. That's not 2 months. That is 2 decades, 20 years. Now, you may be thinking 20 years is a long time to be profit. No, It ain't. Stock market has been around for 420 or 430 years. That's a long time. 400 years. So looking for a company that's profitable for 20 years shouldn't be that difficult. As a matter of fact, there's over 300 companies that are consistently profitable just like that. I hope you got a pen and paper. Here they come. You ready? Here they come. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and Warren Buffett's list. Those 5 lists right there will give you more than 300 companies that are consistently profitable. You want to know how to find them? Google. Dividend Kings list, 2025, search. Warren Buffett's list, 2025, search. Simple, just like that. Boom, within a couple of seconds, somebody's willing to give you those lists of stocks. Okay, so rule number 4. It's taking me a while to get to it, sorry. Rule number 4, weekly options only. I don't do monthlies, the numbers just don't work. Someone's going to ask me. I just know it every single night. They always ask me, let's take a look at this stock. That's monthly options. I don't do monthly options, the numbers just don't work. That's it. Okay, and rule number 5, make sure all the numbers work. What do I mean by that? What do I mean by that? All the numbers. Uh-oh. What the hell? What the hell was that? I have no idea. I moved and everything just moved. All right. When I say all the numbers, the number one number, that's funny. The number one number, the main number I'm looking for anytime I turn on a chart is this one right here. 40, 55, 40, 55, 40, 55, 40, 55. It's there 4 times. Well, that's the number I'm looking at. That was the last trade today. So hypothetically speaking, the stock should open up relatively same area tomorrow, 40, 55. So the closest strike price to 40.55 is right here. 39.50, 40, 40.50, 41, 41.50, 42, so on and so forth. The closest one to 40.55 is going to be 40.50. And that's going for 37 cents. So you know what I said to that one? Next. Sorry, Anna. Okay, as much as I like Verizon, it's only offering 37 cents on a $40.50 position, which is less than 1%. Okay, well done, my friend. 50 years is impressive. Well, thank you there, Lopez. But I didn't even try. Okay, I just, woke up and went to work. Think about it. You wake up, you go to work. You wake up one day and all of a sudden it's like 50 years has gone by. It's like, holy shit, am I really this old? I wasn't planning on being this old. It just happened. Stocks on Demand. How are you today? You're new here. That name I would remember. Lopez. Ah, yes. I heard of this through TD. Okay. Thank you. LED 3067. How are you doing today? Sam Tang Fu. Interesting name. All right. I got my tea. Hopefully that helps. Yeah, I'm not used to talking so much. Can you do it in your IR, in your 401k? Absolutely. Now, here's what I would do. This is what I would do. I'm not telling you to do this. This is what I would do. Okay. First of all, find out who is managing your 401k. Number 2, is the company matching your 401k? If the company's not matching your 401k, you should probably put it someplace else in your own care. Okay? Basically, you don't know anything. Thank you for that. Get out, blah, blah, blah. Ashley, hi. How you doing, Miss Ashley? Ashley, hi. 401k, if you cannot self-direct it, that means someone else is doing it for you. Okay? So, my opinion, this is just my opinion. It might be a fact, but it's also my opinion. Nobody has as much interest in your money than you. So do you honestly think somebody else who's getting paid to take care of your money has your best interest in mind? I don't think so. So when you get to my age, on this side of the fence, This side of the fence is we sleep until we're done. We do whatever we feel like it because we put our time in. Okay? You got to put your time in. You got to pay your dues. Steven Tyler. Everybody's got the dues in life to pay. Dream On. Remember that song? I love that one. That is my favorite song, Dream On. Everybody has the dues to life and pay. You have to pay your dues. I put in 50 years. Okay, how many years are you putting in? And what are your plans once you get here? Here is retirement for me. Okay, 2 years ago, I said, what do I want to do? Someone told me, why don't you do some TikTok videos? I said, what? He showed me how to do it. I said, cool, let's give this a try. I was dead set against not using it. TikTok is for kids. No. Anyway, let's keep on keeping on. Can you do it in your 401k? Yes, you can. Benji, how you doing? Benji Jr., sorry. DJ, what's going up? Oh, wow. Where are we? 1,000 a week. We have 52 weeks a year, 52,000, blah, 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 blah. Where are we? Wow, all these questions. All right. Right there we go. Could you do it 41K? Yes, you can. Jake Claver, thank you for that, Jake. Angie, how you doing today? Crypto Sensei, how you doing, Crypto Sensei? Duce, are you selling in the money? Yeah. Okay, no, Duce. I always take a look at all of them. In the money, at the money, out of the money. What direction is the stock going? What looks the safest? For me, I'm more interested in safety rather than profitability. Okay? If I get 2 or 3 opportunities, I'll do the one that is safest and still gives me 1%. It's always about the numbers. What am I buying it for? What am I selling? What is the momentum of the stock? What are the other buyers and so? See, the reason why we look at the 1-year chart first is we look at what the other buyers and sellers are doing. Okay, it went down, it went up. It went down, it went up. Now it kind of went sideways for a bit, up, down. Right here is what I want to take a look at. But Verizon doesn't work only because the numbers just not that favorable. So, next. Scotty, what's happening there, Mr. Scotty? Whirly Ziller. Scott Teal, what's happening? Dumb. Okay, crazy man, thank you, you're welcome. M4, Mason Mount, pick up AMD, Advanced Micro Devices, around a month ago. Grabbed Triple VIX. I grabbed triple level VIX last Tuesday, massive win. All right, good for you. Not quite what I'm looking for, but all right. Let's take a look at AMD, Advanced Micro Devices. Hell no. Wasn't that quick? The reason why I'm saying hell no is, look, she's down here, okay? Down, up, down. Now she's going up like this with this big, huge gap. A big gap that size going from 160 to 240, that's $80. $80. Think about it. $80 at 160, that's a 50% increase between here and here. Jumped 50%. What do you think is going to happen next? Seriously, think about it. We're down here, 160. It goes up to 240. That is $60 increase. $60. I love that. $60 increase on a $160 stock. Oh, sorry, an $80 increase. $80 increase on $160 stock. That's 50% increase. This baby's coming down eventually. Okay, I don't buy. Look at the high, was just last Thursday. This is my quant. All righty, good for you. Dan, your day off. Today is Tuesday. My day off is Saturday. What's the risk? The whole amount invested? No, Leah. Hold tight, Leah. All right, Miss Leah, that's a very good question. Now, I'm assuming you're new to investing. When you're investing, specifically in dividend stocks, primarily those companies that are at least 5 decades or older. That's 50 years or older. Okay, Bank of America, over 100 years old. Coca-Cola, Pepsi, over 100 years old. Okay, Procter & Gamble, Wells Fargo, Capital One Finance. I can keep going on and on. These companies are over 100 years old. Now, the risk, Leah, comes when you hit the wrong button or you sell at a price you did not want to. Dingle nut, if I were to invest into a company, would I do a company that is small but getting bigger, or a company that is big but might die down? Okay, Dingle nut, I'm not quite sure what you're getting at, but here's the thing. I'm only looking at companies that are consistently profitable, over 5 decades old. That means they've been in business for over 50 years, which means they've seen a lot of crap. Well, think about this. What have we seen in the last 100 years? World War I, World War II, Vietnam, Korea, the Gulf, Afghanistan, Iran, Iraq, all that bullshit over there. And then we have the stock market crash of 29, 87, 2000, 2008, 2021, 2024, and this year. That's as far as I got off the top of my head. We also had the Great Depression. We also had the Dust Bowl. We also had the oil embargo. We've had a lot of crap happen over the last 100 years. Yet, Coca-Cola, Bank of America, Wells Fargo, Pepsi, Procter & Gamble, Colgate-Palmolive, Clorox, these companies over 100 years old are consistently profitable year after year after year, even through all that crap. So, Leah, the risk would be you doing something that you don't understand, hitting the wrong button, or something to that effect. Okay, that's just basically what it is. If you buy a good company, let's say AT&T, okay, General Motors, Ford, IBM. If you buy a good company at a good price and you never sell it below what you paid for it, you're not risking anything, okay? Do the stocks move up? Yeah, they move up, they move down, they move up, they move down. That's all they do. The idea, Leah, considering you're new here, is find something that you like. Find something that you understand, okay? Do you understand who ExxonMobil is? Colgate-Palmolive, Clorox, IBM, AT&T, Home Depot, Lowe's. Do you know who these companies are? Do you think these companies are going to go out of business? Okay, have they been profitable year after year after year? Okay, I can't say anything to make you feel better about your situation. You're the only one who knows what is risky for you and what is not risky for you. I did the same thing with my older daughter. She's 27 now. Well, here's the thing. At 9 years old, she said, Daddy, what are you doing? Can you teach me? Well, it was great right up until she was 11, 12. And then when she hit 13, she wanted nothing to do with Dad other than Dad's wallet. You know, Dad was the walking ATM devil. Daddy, can I have money for this? No, I don't want to do that. Daddy, can I have money for this? No, I don't want to do that. That's the way it was. Girls, don't give me a lot of crap about this. Okay, it was actually my experience. When my daughter hit 13 to about 24, I was the devil. She wanted nothing to do with me. Now that she's older, living on her own, having to pay her own bills, light bulb comes on. Oh, wait a second. Anyway, so hopefully that makes sense. KB, how you doing? IMG, how are you? Do say $1,000 a week. We have 52 weeks in a year. That's annualized to 52,000. Simple interest, yes. But if you compound it, it's more like 64. Eric, how you doing? Zillvilly 6. I'm looking for risk. Alrighty. I have no idea what kind of risk you're looking for. 50% is crazy high. I'm not looking for 50%. I'm looking for one. One at a time. That's all I'm looking for. G-Man, what's happening? iCrast44, how you doing? Justin Beard. Are you referring to return on capital at risk or total portfolio value? Wow, Justin, holy cow, that's a great question. Hold on one second. Now, I don't know if any of you guys realize this, you just can't talk for 3 hours every single day Well, 3 hours at night, 2 hours in the morning. That's 5 hours a day, just continuously talking. It gets to your throat after a while. And how do you adjust for theta decay if the trade goes against you? Oh, Justin, love those ideas. Love those questions. Those are great. All right. Hold that thought. Let's look at Occidental Petroleum. OXY. Not that one. How about Schlumberger, SLB? That's a good one. Let's look at this one. All right, Justin, are you ready for this? All right, Justin, you ready? Schlumberger, dividend king, 5 decades of increased profits. All right, here we go. Here's the high, here's the low, here's where it was, here's where it is. Okay, down, up, down, sideways, down. What's here? Not quite the bottom of the year. The bottom's here. But this is pretty much the bottom for the last 6 months. So let's zoom into that. All right. Justin, right? Justin? Okay, Justin, this is 30 days. Now, anytime I look at any chart, I'm still looking for 5 things. 1, the high. 2, the low. 3, where was it? 4, where is it? And 5, what's the motion? The motion of the ocean, the path through the woods, the trails, or whatever you want to call it. What are the buyers and sellers doing? Here's the high right there. She drops, retraces, drops again. Now you have 1, 2 days up. Okay, the bottom's right there. Now she's going up. Okay, how much is it going to go up? Don't know. Let me continue. Now, I like Schlumberger because it is a dividend king. They've been increasing their profits for more than 5 decades, so I'm good with that. Currently, the price is $32.57, 32.57, 32.57, 32.57. The closest strike price to 32.57 is 32.50. 32.50, and it's going 72 cents. Now, if you don't know right at the top of your head what is 1% of 32.50, it's 32. 32.50, 32. $32, 32 cents. 1% of $32 is 32 cents. You're just moving the decimal point over 2 places. That's it. So I'm looking for 32 cents per share. So I get 100 shares, it's $32. I get 1,000 shares, it's $320. If I get 10,000 shares, it's $3,200. It's all relative to how much money you have to work with. You get 10 grand, fine. 50% is 500, is 5,000. You get 20,000, 50% per year is 10,000. You got 100,000, 50% a year is 50,000. You got 1,000,000, 50% a year is 500,000. It's all relative. 1% is 1%, no matter how you look at it. Okay? So 72, I like that. Let's go through it and Justin, see if you can follow along. Okay? Let's get rid of this. Let's do a covered call right there, and the 32.50 right there. 1 contract right there, and right here. Here we go. And here's Johnny. You ready? Buy 1 covered call Schlumberger. 100, which is the weeklies. 17 October 25 is this coming Friday. That means whoever is at the other end of this equation. If I'm buying, I'm selling it to someone else. I have no idea who it is. Someone is buying it. Okay, if the market maker posts it, he has to fill it. So, 32.50 call option against Schlumberger at the market to open. Okay, here's the profit right there. Maximum profit, $69.50. Cost of trade, including commissions and fees, $31.81. Let's do a little bit of math to see what that comes out to. 69.50 divided by 3181, grand total of 2.18% for 1 week. 2.18% for 1 week. Now, if 1% a week is 50% a year, 2% a week is over 100% a year. Well, 2.18 is more than 100% a year. Now, that's just for this one trade. Okay? Now, Justin, I have no problem whatsoever. Let's do this. Let's adjust this right here. Let's edit this. Now, I want to do 10 contracts. Okay, 10 contracts is going to cost me 30 grand. Okay? Now, I'm making 695 bucks. 695 bucks by 10 covered calls of Schlumberger. 17, October 25, the 32.50. Nothing's changed except for the quantity. The profit is now 695 and it's 31 grand. All right, well, let's just do this. All right, 695 divided by 31811 comes a grand total of 2.18. It's the exact same rate of return, but a larger number. So, Justin, what I'm doing is I'm taking $100,000, getting 5 positions, 20,000, 20,000, 20,000, 20,000. Out of those 5 positions, I want to gain $1,000 for a week. So, 1, 2, 3, 4, 5. Okay, each one giving me 1% a week. Okay, 1% of 20,000 is 200 bucks. Yeah. 1% of 20,000 is 200 bucks. So if I get $200 from each trade, okay, that's over $1,000 for 1 week on my $1,000. So if I have $150,000, I want $1,500 a week. So whatever my portfolio is, if it's $300,000, I want $3,000 a week. That's my goal, 1% a week. Okay? Does that make sense? But here's something, Justin, okay? That's what the rate of return is if it was all cash. Okay, 31.11 is all cash. If, Justin, if you do margin, which I do because I've been doing this for a long time, I understand margin. And before I go on, let me reiterate, let me repeat, let me sound a little bit louder. Do not do margin until you understand the risks involved with it. It's not advice, it's just an observation. Okay? So, this is my scorecard. It tells me everything I need to know. If I'm doing it on a margin, I'm not putting up 31, I'm only putting up 15. So let's see what the rate of return is at 15, Justin. Okay, let's clear this. The profit's still the same, 695, divided by 15,511. Okay, divide 15,511. See this, Justin? Now, that exact same trade, I'm getting 4.48%. That's 4.5% for 1 week. Now, there's risk involved. Okay, the risk is margin. I'm borrowing someone else's money, which means I'm paying for someone else's money. So the margin that I'm paying for getting old is no fun. It ain't. The margin I'm paying for, Justin, is 8% per year. I have no problem paying 8% per year. As a matter of fact, I'll pay up to 20% per year to borrow someone else's money because I've been doing this long enough and I feel confident enough with what I've been doing. So 1% a week is 50% per year. And that's the total value of my portfolio. If I got 100 grand, I want 1,000 a week. That's over 50% per year. That trade like this giving me 4%, that gives a little bit of leeway for other stocks that aren't giving me quite 1% that I'm still hanging on to. So I hope that made sense, Justin. Let's go. Who's next? That feed lot gal. What's your thought for a call on AG? That feed gal, I don't buy options. I only sell them. But let's take a look at AG. What is that, by the way? I have no idea what that is. It doesn't sound familiar. Let's get back to the beginning so we can pull up AG and go from there. AG, which is First Majestic Silver. Why the hell am I looking at this? Hell no. I'm sorry, kiddo. I don't buy anything at the high. Okay? A year ago, 6 months ago, we're at $5. Now it's up to 13. Okay, that looks like a profit taking. Look at this. From here to here, all of that right there is begging for profit taking. If I bought something at $5 and now it's at 13, here's the thing. It ain't a profit until you take it. Nobody ever went broke taking profits. Okay, so if you bought it 6 months ago here and now it's up here, you can do whatever you want. Who, Jim, Mr. Hand, if I'm here and you're here, isn't that our time? Sure, why not? Oh, Armanani, AWR, that's American Water, that's a monthly, AWR. Yeah, I don't do monthlies, the numbers just don't work. October, November, December, January, March. No, because see, monthly is one trade per month. That's why it's called monthly. So if I'm making 1 to 2% per month, that means the most I'm going to make at the end of the year is 12 to 24%. Why would I want to do that if I can do 1 or 2% every single week and get 50% to 100%? So I just don't do monthlies because they just don't pay enough. That's me. That's just my opinion. You want to do them? You have at it. Ooh, Jen Pika, how you doing? Haven't seen you in a while. Or behavioral mispricing. Okay, Mason Mount, I have no idea what behavioral mispricing means. But Jen Pinka wants to take a look at IBM. I'm going to say no to IBM really quickly, and here's the reason why. Your 30-day bottom is here. She shoots up. Here's your 30-day top. Now she's coming down. Why would I jump into something that's coming down? Why don't I just wait for it to find the bottom wherever it's going to be and then get into it there? Now, don't get me wrong. I love IBM. As a matter of fact, I own some IBM at $285. I have no intention of selling it because it gives me a premium every week. PH, is that Parker Hannifin? Yes, it is, Parker Hannifin. That's a no. I don't do monthlies. October, November, December, February, May, no, and no. Do you offer a class? Camus, yes, I do. Okay, on the top left corner, just go to the website and just, all the information's there. I promise I'm not going to try to sell anything. Okay, so I'm not going to try to sell anything. We're all adults here. We know how it works. You go to the bio that tells you everything you need to know about me, my company, how long I've been in business, blah, 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 all that kind of nice, neat, fun stuff. WHRKB, come on, that's Whirlpool. We know that's a monthly, and so is GPC. How often do the calls get exercised in your experience? About once every 3 months. Very rarely will my stocks get taken away through an exercise. Do you hold any stocks long term? Now, my idea of long term is 30 days. Okay, the longest I've ever held anything was KSS Kohl's. I held it for 14 months. Before that, it was 9 months, and that was Kimberly-Clark. Now, there's two different reasons. Kimberly-Clark dropped like a rock. Don't get me wrong, I still sold covered calls against it while it was down until it recovered. Kohl's gave me 1, 2, 3% every single week for 14 months. 14 months, 1 to 2% every single week. So yeah, I just kept on holding it, kept on buying it, kept rolling it over. And if you're interested in a rolling, yeah, that's a little bit more advanced. We'll talk about that a little bit later. US user AJ, hello, Dr. Hoover, how are you? C-Wide Spinner, what's going on? Everything is blue tonight. Okay. I put in 3 years and got funded by YC. I have no idea what YC means. Uh-oh, Mike wants to take a look at DraftKings. Now, Mike, I'm going to tell you right now, DraftKings has not been around for 2 decades. The profits just aren't there. I don't even think they have dividends. But high, low, where was it? Where is it? Okay, up, down, up, down, up, down. What's going on right here? Let's zoom in. Last 30 days. Okay, what do you think, Mike? Here's your high. She drops to the bottom right there. It's going sideways here. Not quite back up yet. But we have 2 days here, Monday and today, going up. And it's at 34.36. The 34 is going for 86. The 35 is going for 40. So either one of those is going to be fine, depending on which one you like. But the thing is, Mike, I wouldn't do DraftKings because it hasn't been around long enough. It doesn't have the consistency of profitability that I'm looking for. Let's see how long my voice holds out. Let's keep on keeping on. Do I offer classes? Yes, I do. I'm glad to learn from you. You're a great mentor. Thank you, Mr. Jake. Uh-oh. Nico wants to take a look at SCHD. I tell you what, Nico, before I take a look at SCHD, please do me a favor. Go find out how consistently profitable SCHD is, and then come back and tell me, and then we'll take a deep dive into it, and I'll tell you anything you want to know about it. Until then, I want you to do a little bit of homework, because I've looked at SCHD long enough. I don't want to look at it again. Chap, Steven, VMC, all-time high. If it's at an all-time high, why the hell are we looking at it? Think about it. Why the hell are we looking at this? Where's the opportunity? Okay, there's no opportunity to buy something at the high of ever. Ever. It's never been this high before, so why the hell are we looking at it? Anthony, how you doing? Beauty Lounge. Good evening, Beauty Lounge. How are you doing? SB 1981. AGNC. Now, don't get me wrong. I don't like AGNC. Nothing to do with the company. It has to do with the market maker. Look at this right here. 0, 0, 0. Okay? If you are not right, you get nothing. Ever. You only get money on AGNC if you are right. The current price is $10. $10 is going for 8 cents. Not even 1%. Ooh, MHODS. MHODS? Gap. GAP. Interesting. Ooh, look at that. 2 to 3 seconds. Ready? High, low. Where was it? Where is it? Okay, up, down, up, down, up, down. What's going on here? 2063, the 2050s going for 32. Hell yeah, why not? Or the 21s. They're going for 23. Now the 21 is going to be more profitable. But the 2250, that's going to be safer. So here's the part where you have to choose. Do I want safety, 1%, or whatever it's going to be? Or do I want more profits and go for something a little bit different? How can I earn $1,000 a week from investing $100,000, please? 1% per week on $100,000 is $1,000. So look at me. You know, I'm not saying that to everybody. That's his name. Whoever that is, look at me. Okay. If you just sit and chill, you're new here, because I definitely remember that name. Just sit, chill, observe. Okay. All the answers will come. It's kind of like a movie. Everything will come together by the end of the movie, and everything will make sense. Okay. So gap. Everything looks good, right? So let's look at the last 30 days. What's happening here? Okay. Here's the high. Here's the bottom. 1, 2 days to the upside, and the third day will be tomorrow. So if this thing hits 2064 tomorrow, that's where I would jump in. Getting old's no fun. It really ain't. All right? The older you get, certain things just stop working. They don't work like they used to. I wasn't quite ready for this 62-year-old bullshit. I wasn't. Okay, growing up all my life, I was just so used to doing this, and all of a sudden, I just can't do it anymore. Not that I don't want to do it anymore. Not that I physically can't do it anymore. It's the recuperation. See, I go play soccer every Saturday, okay, and it takes me 2 to 3 days to recover all the bruises, all the cuts, and all the fatigue. Yeah, it takes me 3 days to recover. I used to be able to do it every day. Not so much anymore. Okay, so M-HODS. M-HODS, let's do this. Let's do the gap at 20.50. Okay, down to covered call. Here we go. So look at me. You ready for this? This is just give you an idea. It's called a covered call on a good quality company. So you got to ask yourself, do I like the gap? Then you got to ask yourself, do I like the gap at $20.63? And then the next question is, am I willing to buy it at $20.63? Never, ever, ever sell it at a loss and then just keep doing it every single week, getting 1% every week. So 1% a week is over 50% per year. It's a simple strategy created for my 9-year-old. You know what? After we do this, I'm going to introduce you to the 9-year-old. So you can say, oh yeah, there she is. Okay, covered call, the 2050s right there. Okay, one contract right there. Right there, and let's do this. Here we go. Buy one, covered call, the gap, 100. 17 October 25, that's this coming Friday. $20.50 call option. So I'm basically buying it for $20.63. Selling it for $20.50. Now, who caught that? I'm buying it for $20.63, and I'm selling it for $20.50, and I'm still walking away with a profit. Do you see that? So I could buy it tomorrow morning, sell it Friday, walk away with a profit, and then do it in another company on Monday. Well, that's exactly what I do every single week. I look for opportunities like this. First question is, do I like the gap? Do I like the gap at this price? Am I willing to buy it and hold it, never sell it for less than what I paid for it? Except for this instance, because the $20.50 is going to give me this profit right here. It's not huge. It's only $30 per contract. Each contract's $2,000. So what's the rate of return for this one particular trade? And if you like it, you can always scale it up, because 1 is $30. 10 is $300. 1,000 is $3,000. So it all depends on how much money you got to work with. Now, look at me. You got 100 grand. So this trade right here is only $2,000. So let's say hypothetically, you do 10. Okay, so 10 contracts is $20,000, and your profit would be 300. So $300 on a 20,000. So let's see what the rate of return here. Okay, calculator. $30.50 is the profit. We divide it by the rate of, what do you call that? What do you call that? The cost of trade, including commissions and fees, $2,000. So the profit is 1.5% for 1 week. Now, if I'm looking for 1% a week, great. This trade right here for the gap is giving me 1.5%. Well, 1.5% is what is that, like 75, 80% per year? Let's multiply it by 52, because it's 52 weeks in a year. 78%. Well, I'm good with that. I don't know. All right, let's go out of here. All right, so in your instance, 10 contracts. Whoops. All right, 10 contracts. Okay, here we go. See, profit, $295, 20 grand. Okay, calculator, 295, divide 20 grand, 211, grand total of, oh, look at that, 1.4%, the exact same. Okay, 1.45, the same return. One contract, 20 contracts, it's still 1.4%. 1% per week is still 50% per year. Alberzer, how you doing today? Do you hold any stocks long term? No. Every single stock I have. Now I have 7 accounts. I share 3 of them publicly. Okay, hold on a second. I told you I was going to share this. Let's share some stuff. Some stuffy stuff. Oh, why isn't that popping up? Why isn't that popping up? Get rid of that. Get rid of this. Get rid of that. Get rid of that. Get rid of this. Get rid of, uh-oh, what the hell's going on here? No, don't want that, don't want that, don't want that, don't want that. What the hell's going on? Nope, don't want that. Uh-oh, well, I guess we're not going to see that then, are we? All right, let's get rid of this. We'll have to do it another day. Sorry. Let's get rid of this, and we're back where we started again. I was just going to introduce you to the princess and show you the 3 accounts I do. How do I know a company pays dividends? Oh my goodness, I can't believe it. No, all right, so you're new here, so I understand that. Rule number 1, never buy anything you don't understand. Unless you want to hold it long term, you should know everything about the company. Okay, is it consistently profitable? Does it have weekly options? Does it pay dividends? If so, how many dividends has it paid? And are those dividends consistently increasing or have they been decreasing? You should know all this information before you do anything. So let's try it this way. New window. Oh, well, let's see if a new window opens up. We'll find out. All right, so Bowser, you got that? Wonder Bread I bought at 113. I have no idea what that means. Sweet Den, hello, James. Have a prosperous week. You've earned it. Thank you. Microsoft Edge isn't responding. Bummer. Now I need to trade smart and build forever wealth. That makes sense. Kind of does. Think about it. Okay, so here is the 10-minute trader. Remember I told you my website, the 10-minute trader. We're going to go here. We're going to go here. That's going to take us to my social media right there. And we want to look at YouTube because that's where the princess is. I'm going to need my glasses for this. All right, now remember I told you 2 live streams, okay? This one here and this one. They're both live. You can go to YouTube and pull it up on your big screen. That way you can see the numbers easier. All right, what I want to look at is the videos. Okay, now I want to find the oldest video. And there she is right there.
Hi, as you being part of the internet, like a company, which my dad says let me go on that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
All right, there's me. 15 years ago. Look at all the hair I have. Holy cow. Here's my favorite part. My favorite part's coming up now. You ready? Let me get out of the way. Here it comes. Here it comes. How else are you going to keep a 9-year-old entertained? Fun, exciting. We made a game of it. It was fun. It was wonderful. It was like 5 years. From she was 9, 10, 11, 12. All right, it was 4 years. When she turned 13, forget it. She wanted nothing to do with me whatsoever. Dad, you just don't understand. You're right. I don't. See, a man cannot raise a woman, a daughter. Can't do it. You need a woman to raise a woman. You know, it's like you need a man to raise a man. Okay, women, you can't raise a man. It just doesn't work that way. All right. Anyway, besides the point. We don't need that anymore. All right. We don't need this anymore. Oh, could we look at Pinterest? Oh, I can't believe you want to look at that. Uh-oh. This one's dying over here. Got to change cords. Guess that brand new cord don't work. I just got some brand new cables today. All right. I don't even know why I'm bothering with that one. Like, how do everybody shows up at that channel? Pins. She wants to look at pins. Why do you want to look at pins? That company hasn't been around for 20 years. All right. Well, you want to take a look? Let's take a look. P-I-N-S. Pinterest. Interesting. Okay. You guys asked me to take a look at something. I'll take a look. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Down, up, down, up, down, up. Nice. I like this area right here. Okay. Now, I don't know if they have dividends or not, but that's not part of the deal. She asked. I'm taking a look. The current price, 33.12, 33.12, 33.12, 33.12. The 33 is going to be the closest, and that's going for 68, which is more than 2%, but not really. Because see, if I buy it at 33.12 and I sell it at 33, I'm losing 12 cents right off the top. I'm sure some of you caught that. If I buy it at 33.12 and I sell it at 33, you're right, I'm losing 12 cents. You take that 12 cents out of this right here. So I'm walking away with 56 cents. Not quite 2%, but still almost 2%. So let's take a gander at the whole thing. A year ago, we're at 34.24. Take a look at this. A year ago, 34.24. Now, 33.12. So in a year, the thing went down $1. All right, anyway. Top of the year was in this first week of February. The bottom of the year, we got a double bottom in April, twice. Shoots back up. Okay, your high, your low. Where was it? Where is it? Look at this. Up, down, up, down. Now she's going up. Here's your bottom here. 1, 2 days to the upside. So tomorrow would be a perfect opportunity to jump in if it opens higher. If it opens lower, no, thank you. If it opens higher, yeah. Now, I like finding a bottom after a 30. Okay, let's go to the 30 days so you get a better idea. Here you go. That's 30 days. 30-day high, 30-day bottom. Now she's going back up again. Okay, drops to the bottom. Now she's going up. All right, that's what I'm looking for every single week. I'm looking for good companies that I know who they are. I know what they do. I can take a look at all the numbers in order to make it a safe trade. And then I jump in if everything looks good. So far, everything looks good here. So let's go to the next stage. The next stage would be the covered call at 33, right there. One contract. Okay. Here it is. By one contract, PINS. 17 October 25. That means it's expiring this coming Friday. The $33 call option at the to open, 55 is the profit, 32 is the investment. Let's see what the numbers look like. Why is all these freaking things not working? All brand new, and they just don't want to work. There we go. All right, so let's get the calculator out. 55 divided by 32.45, grand total of 1.69. 1.69% for 1 week. But here's the catch. Do I like Pinterest? Am I willing to buy it and hold on to it until it hits my target? Well, here's the funny thing about hitting my target. I'm buying it at 33.12 and I'm selling it at 33. So it's already above my target. So all it has to do is stay above 33 come Friday. Well, guess what? Guess what? Check this out right here. Okay, your 30-day highs right there. Your 30-day bottoms here. She drops. Now she's going back up again. Does it make, see, number one question, does it make sense? Buy a good quality company that you're willing to hold on to for the rest of your life because you like the company. That's the only reason you should buy something, because you like it, you know what they do, you know if they're profitable, and you know you're okay with holding on to it. Well, that's rule number one. Rule number two is never sell at a loss. So if this thing drops down to 30, if it drops down to 20, I would have no intention on ever selling it below what I ever paid for it. And the nice thing about it is look at the premiums. Okay? At the money, 68. 1 strike out, 46. 2 strikes out, 30. 3 strikes out, 18. See, I can keep getting money all the way down. As a matter of fact, how far down does this go? Okay. At the money's 33. Okay, that's 68. 1 strike, 46, 30, 18, 15, 10, 7, 5, 4, 3. Then we get to the zeros at 38. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 strikes out of the money, and I'm still bringing in something. Yeah, it's not 1%, but here's the thing. Before you met me, before you came up, well, I can do this weekly? Weekly? Really? Before you learned that, most people bought stocks and were happy getting a dividend, 1 dividend every 90 days. If you buy a stock, you hold on to it 90 days, you'll get a dividend. Another 90 days, you'll get another dividend. Well, here we're buying a good quality company that has dividends and they keep increasing. Why else would you buy it if it's not consistently profitable? Which means the dividends would increase every single year. Worst case scenario, if this thing drops, I get a higher dividend next year, and the year after another higher one. But I also get the privilege of bringing in something, whatever it is, every single week until I sell it. And I refuse to ever sell anything at a loss. Okay, I pushed forward Target for 6 months because it dropped. Not Procter & Gamble. Not PPG. Yeah, PPG was one. I just said it a little while ago. Kimberly-Clark. Kimberly-Clark, 9 months. That's the longest I've ever held anything until Kohl's. Now, Kimberly-Clark, PPG, and Target, those 3 all dropped. Kohl's didn't. Kohl's just went sideways and went up. I made money every single week on Kohl's. Let's do Kohl's right now. Kohl's. Just to let you know, I did buy some Kohl's this morning. Okay, today is Monday. No, wait, today's Tuesday. I bought Kohl's yesterday. All right, so let's take a look. High, low, where was it? Where is it? Look at this. Down, up, down, up. Simple, right? Okay. So it's at last 30 days right there. Okay, that's the last 30 days. Now, the reason I look at the last 30 days, that was a month ago. Most of us can understand a month ago. It's not that far ago. Okay? 15 jumps to 18, drops to 15, jumps to 17, drops to 14, 2 days up. Okay? Argue all you want. Higher, higher. All right? So let's see what Kohl's looks like. Let's get out of that. The 1550s, you can't get any closer. Seriously. Don't give me a hard time about this. Okay? Someone's going to. Someone always does. You can't get any closer to 1550 than 1549. 1549, 1550. Why not? Let's do the 1550. Look at that. 39 cents. That's more than 2%. Hell yeah. I don't want to do that. I want to, see, I hit the wrong button. Even I do hit the wrong button. 1550. There it is right there. Okay, 1 contract right there. By 1 covered call of Kohl's, 17 October. That's this Friday, 1550. This giving me $45, and it's a $1,500 investment. I'm going to show you 2 of them because I bought it at a margin. Hold on. And I do not suggest anyone use margin unless you understand the risks involved. So 45 bucks is the profit. The outlay is 1505, and that comes to a grand total of 2.99%. You have any idea what that is at the end of the year? Well, let's find out. 52 weeks, because there's 52 weeks in a year. That's 155%. That's more than doubling. Well, no, it's not doubling your money. Yeah, that is. That's more than doubling your money in a year. Okay. So I got it on margin. All right. Margin is only $1,000. Not quite 50-50, but still. All right. So 45 bucks. Divide by margin requirement, 1040. Okay, divide 1040, grand total of 4.3. Think about it, 4.3 for 1 week. Why the hell not? It's Kohl's. Here's the thing. Do you like Kohl's? Does Kohl's make sense to you? Are you willing to buy it, never sell it, blah, 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 blah. Okay. DP402, do you have any advice on silver? Should people buy it, or is it the high we're seeing temporarily? Thank you. Okay, so DP402. I don't buy precious metals. Now, the only reason I don't is they don't offer cash flow. Okay, and you can't take a brick of silver to go get a cup of coffee. Okay, what good